Well, we have Oliver Slope on the line with us now. He's with Blue Line Futures in Chicago. So it's interesting, all the strength that we saw develop after the open in the grains, except for the nearby corn. And that's the only one that had some sales. That's kind of weird here, Oliver. Try and make some sense out of that.
Yeah, well, you're right. We got another flash sale this morning. Today was to unknown destinations over the past week and a half. A lot of that's been to China, and perhaps unknown destinations is China. But that's 4.5 million bushels, roughly. So nice to see that coming into the market, but not really helping the market really gain some ground here to start this week's trade. I anticipate the volatility to continue to rise. Looking at the CME CVOL index, it's a measure of volatility in the corn market. We're seeing that seasonal rise, which is what we get. You mentioned this being the last month of March, and that means we've got a big report at the end of the week as well, which is going to give us kind of a line in the sand as far as what crop and how many acres are going to be planted. And that's going to keep things rather interesting here. We see the new crop December contract trading about a 35-cent range on the back of that report over the last 2 years. And then for soybeans, we've seen about a 70-cent range over the last 2 years. So we're seeing the choppy trade this morning, and I wouldn't be surprised to see that continue through the rest of the week and past that USDA report.
Well, you know what? When we get that prospective plantings report on Friday, we're also going to be getting a quarterly stocks report, and I haven't heard anybody talking about that. Is it possible that that could be overlooked and be a dark horse as far as a market mover?
It very well could be. This report often has a lot of fireworks baked into it, and it's not just the acreage number, as you had mentioned. It's that quarterly stocks number that's going to have a big impact on prices as well and influence money flow. And recently, we've seen that money flow shift to the sell side, specifically in that corn market. Managed money net short about 42,000 contracts. I think the concern for some people out there is the fact that the funds still have a rather long net long position, about 110,000 contracts there. So if we do get a bearish report, there's still risk of a long liquidation in the soybeans. And looking at that managed money position, when broken down, it's 134,000 long contracts versus about 24,000 short contracts. So it's definitely skewed towards the long side. The bulls are hoping to hang on to that momentum and kind of keep the things going in their favor here as we head into the spring months.
As we head into the break, I want to take a look at the crude oil market. West Texas crude this morning. It has been making a move too. May futures up $1.39 at $70.64 per barrel this morning. We'll pause right here, and Oliver will come back, and we'll take a look at our livestock trade and talk about that next.